Well, I'm going to go ahead and get started then. Not sure if everybody's there or not, but anyway, I'm Carl York, Kansas Department of Revenue. Sorry for the technical difficulty. That pretty much happens every time I use a computer, so that's par for the course for me. Sorry about that. I'm with the Department of Revenue, so a lot of people sometimes confuse that with the IRS, and definitely not the IRS. Um, Whatever I tell you today is not binding to the Department of Revenue. So that's actually every representative of the Department of Revenue. Until we basically what they've told me is until we've audited you and see exactly everything that you're doing, it's hard to tell if something is taxable or not. Well, that doesn't do you any good when you want to find out what the taxability of something is. So um, they did create a way that you can do that. If you're First of all, you have to be registered. Registered means you have a sales tax number. You're actually in business. Has to be an actual situation, so it cannot be a hypothetical. So if you email a question in, I got the email address on the screen there. You can email for something called a private letter ruling, and it's binding only to you because it'll be based on your set of circumstances and no one else's. And so they will, since it is binding, the question will only be answered. We will only answer what you ask. So you'll want to be as detailed as possible. And I definitely understand you sometimes don't know exactly everything to ask. That doesn't, I mean, there's no limit if you have to get another one, but sometimes with contractors, pictures help because we don't always know what you mean when you're telling us what it is that you're asking a taxable. Um, New words and new equipment and new things come out all the time. So sometimes a picture helps or how it's being used and that type of thing. Takes around 30 days. Well, we have up to 30 days. Doesn't always take that long, but you get that letter, and once you get that letter, it'll say yes, this is taxable, or no, it's exempt. And so, if you're ever audited and the auditor were to think that that was taxable, well, your private letter ruling, that's your get out of jail free card, so to speak. So, because it is binding. Um, the best way to get it, like I said, is I got the email address on there is the KDOR underscore TAC. That's TAC at ks.gov. In the subject line, I would put that email address, by the way, that's the general Department of Revenue email address. Basically, it goes to a customer service. So in the subject line, you'd want to put request for private letter ruling. And behind that, I would also put attention policy and research or attention PNR, something like that. That way it gets to the right department. But a lot of people don't know that that's available to them. There's also notices that we put out pretty much every year after legislation. We have to put out some notices to explain how new legislation is handled, that type of thing. Um, and we have revenue rulings, which are very similar. Those are binding as well. Um, Now, I should tell you by showing up to this class will not flag you for an audit or nothing like that. So a lot of people kind of get nervous whenever they have the Department of Revenue. Usually I'm coming out, but if you're logging in, we're not keeping track of anything. So don't worry about that. What's said here stays here. So this class is for construction contractors. So the distinction with that is you're working on real estate, real property. You're working on permanently affixed buildings and land. That's where the laws are different than what I call regular sales tax. Regular sales tax is when you sell tangible personal property. You sell an item. So they have it very easy compared to a contractor. So whatever they're selling, they buy that without tax. And then when they sell it to their customer, they collect tax on the final cost that they sell it to their customer for. I've very much oversimplified that, but that's in a nutshell what it is. Contractors sales tax, it's twice as hard. Um, on the screen there, you should see that I'm showing you that there's two parts to a contract. Now, materials and labor, yes, but the way when you're trying to calculate just the sales tax portion, if it's not the physical materials, so you're asking, oh, is this thing taxable? So in your mind, you'll want to say, is this the physical materials that I've installed. If it is not, think of it as labor. It'll follow the taxability of the labor is what it will. So whether it's actual labor to install something or not, if it's not the materials for sales tax purposes, if it was taxable, that would be the rate of tax it would be, is follow the labor. So I always tell everybody, if it's not materials, it's labor. So what I've done here is your basic example, a $9,000 contract. And you can see on there, tax paid materials. That means materials I already paid tax on, $6,000. Whatever's left, that's the labor, $3,000. Didn't have to do algebra, didn't have to do trigonometry, didn't have to do anything. In fact, I always tell everybody I'm no good in math. That's why I went into taxes. And if I was any worse at math, I'd do federal taxes. So nothing but bad jokes, sorry. But I'm going to go over the materials. So we'll go over that. And then I'll go over the labor. And then I'll combine them and we'll go over exemptions and things like that. So we'll get there, but I'm going to lay down that foundation with the materials first so that you have that. And then we'll go on to the next concept for the labor, because it is two parts. So if you think of it as two parts, that will absolutely help you. So in Kansas, the whole idea is to have sales tax paid one time by the end user, the final consumer. When the world goes great, that's what happens. Well, that makes sense when I say that, but then when I apply that to construction contractors, that's when it gets a little fuzzy for people. So first of all, a construction contractor is considered to be the end user of the materials. In other words, it would be like you're buying that 2x4 for yourself, even though you're installing it in someone else's building. And that means a contractor has to pay sales tax on their materials when they purchase them. Now, the reason why that is when you are working on real estate. First of all, real estate, that's permanently affixed buildings and land. If you buy a house, if you buy a building, there's no sales tax on that. There's property tax, of course, but no sales tax. A contractor, they have to pay tax on the materials. Once they pay tax on the materials, once they install it into the real estate, they actually turn that tangible personal property, and tangible personal property is just defined as a physical item. So pipe, conduit, wire, concrete, 2x4s, that type of thing. It's just a physical item. So when a contractor buys that tangible personal property, and once they install it into that real estate, that real property, they turn that tangible personal property into real estate. It no longer exists in this world as tangible personal property. Well, that's also the moment that they became the last person to buy the tangible personal property in the format of tangible personal property, and thus meeting the definition of the end user. An attorney must have come up with that, but that means that the end user owes the tax, so a contractor owes the tax on the material. A contractor's customer should never see any sales tax at all on materials. Never, ever, no matter what kind of job, their customer should never see sales tax on materials. Now, there is a designation as a retailer contractor. It's also called contractor retailer. So either way, the whole idea with this, a contractor retailer, they're able to purchase their materials without tax. Why is that? The reason why they are able to do that is they are mostly a retail business. So as a retail business, they buy their inventory, and most of the time they are not installing this. So you're acting as a contractor when you install or apply tangible personal property into real property. So most of the time they don't do that. Most of the time they just sell the things to people and they'll go install it themselves or have someone do it. Now, from time to time, they will install those things. So if you think of those big box stores, like Home Depot or Lowe's or Menards or something, they have signs all around that say, hey, do you want that water heater installed, or you want that carpet laid down, something like that. Well, when they do that, that's when they're acting as a contractor. So they didn't pay any tax on any of their inventory. They buy it all without tax. Does that mean they get out of this law? No, it doesn't. Their customers should still not see any sales tax on materials if they install it, because they have to pay the sales tax on those materials. Now, they don't upfront because they buy all their inventory without, but what they do is on their next sales tax return, once from that sale, they'll report it on their sales tax return. There's a line on the sales tax return. It's called merchandise consumed. So at their cost. So they don't get out of these laws. They actually have to take the scenic route. So contractors have to pay sales tax, whether you're a contractor retailer or you're a contractor. You owe the sales tax on the materials. Your customer never owes sales tax on the materials. Your customer should never see any sales tax on materials. Now, what I've got there, we have a regulation, especially if you are a business that sells to contractors. A lot of times a contractor will say, well, I'm not the end user, and they'll give the vendor a hard time. So 100 times or more, it seems like I've provided this regulation for people to show, because it's not, if you're selling, it's not your fault. You have to comply with the laws because you can't afford to pay someone else's sales tax that they should be collecting. But right here, this is the Kansas regulation. So the Secretary of State there, if you see, they're the official keepers of that. So if you ever want to look up a regulation, you can go to the Secretary of State's website. But this is 92-1966, and it says contractors, subcontractors, and repairmen. And so what I was trying to show you here, highlighted, is materials used by a contractor, subcontractor, or repairman for a project. And there, we'll go over original construction, but it's saying basically for anything, shall be subject to sales tax. Each contractor, subcontractor, repairman is deemed to be the final user or consumer of materials used by the subcontractor, subcontractor, repairman in a construction project. Each contractor, subcontractor, or repairman shall not give, and each retailer shall not accept, a resale exemption certificate to purchase materials without sales tax. So they kind of drill it into you that, hey, if you're a contractor, you need to be paying tax when you purchase those materials. And if you're a vendor, you need to be collecting tax on those materials if that's a contractor. So I'll have a lot of vendors that'll ask me for this, and because contractors will just give them a hard time, and I'll say, well, you know, it's not your fault. So they do that. And of course, a lot of times they'll talk to me, and what happens is a lot of contractors have started doing business and they just didn't know the law. They might have known retail sales where they buy everything without tax, but they did not understand how it works for when you're working as a contractor, working on real estate where the laws change. So, and that happens. I mean, because before I went into sales tax, I would have never thought that myself. So now, what rate of tax do you pay on the materials? Well, you'll see all over the place in our publications this word destination sourcing. And what that means is that's how Kansas determines the rate of sales tax. So what that actually means is if I'm selling this thing to somebody, that I would collect sales tax on the combined rate of tax, in effect, where they take delivery of, where the end user takes delivery of that. So not necessarily where they pay for it. It absolutely could be. If I go to Home Depot and pick it up there, I pay for it there. Well, I'm going to be paying the sales tax rate right there. But if I go to Home Depot and have them deliver it to me out in the county, and I don't have the same rate, they would have to collect the sales tax rate where I take delivery of it. So that can work to your advantage, by the way. If you're in the Wichita area, I believe a lot of you are. Wichita is one of the areas that has some of the lowest sales tax. It's 7.5%. All around there, it's higher. I mean, I'm in Topeka and it's 9.15, and there's some areas up in the Kansas City area that are close to 10%, just regular sales tax rates. But the reason I say all this is because if I was a contractor in Wichita, if I have my shop, I live in Wichita, I have a shop in Wichita, but I do projects all over the place. And there's a lot of small towns and different places outside of Wichita, but the rate's higher than the 7.5, it's 8 or 9%. Well, whenever possible, I would purchase my materials in Wichita, or I would have all of my materials that I could delivered to me in Wichita, so that I am paying 7.5% because that's where I'm taking delivery of it. Now, if I have it delivered to the work site, well, now it's going to be whatever the sales tax rate is there. So what I'm trying to let you know is the sales tax rate for your materials is not necessarily going to be the same sales tax rate as your labor. It's wherever you, as a contractor, as the end user, take delivery of your materials. The labor is always where it's taking place because you really can't move the labor. I mean, it's there. So now, again, if you have everything delivered out at the work site, well, it's all the same rate of tax. Now, that's an area if somebody is ever audited, that if they didn't pay enough sales tax on their materials, that's where they kind of get bitten on that one. So be aware of that. But also, you can use that to your advantage. There's nothing wrong with that. There's nothing illegal about that. So you wouldn't, if you take delivery of it in Wichita at 7.5, that's all you owe for the sales tax on that. Now, if you purchase your materials outside of the state of Kansas, well, maybe you go to the other states. So I don't know, maybe you go to Oklahoma or you go to Colorado or Missouri or somewhere. And whatever it is, 2x4s, you go buy 2x4s. And if their rate of tax is less than our combined rate of tax, then that'd be where your shop is. So if it's less than that, then you would owe consumers compensating use tax. So for example, if I went to Colorado, bought 2x4s, and the sales tax rate there is 8% and it's 9% here, I would owe 1% consumers compensating use tax. Now, if theirs was 9 and ours was 8, do I get a refund? No, I don't. No jurisdiction will ever refund an overpayment of another jurisdiction's tax. But consumers compensating use tax, it's the exact same rate as sales tax, but it is a different tax. So you would have to register for a consumer's compensating use tax number. So it's designed for something you buy outside of the state that you haven't paid enough tax on or haven't paid any tax on, that you use, store, or consume in Kansas, that you're the end user of, then you would pay this tax. Unfortunately, a lot of contractors learn about this when they're audited, that for the first time, and that's not a good time to learn about it. Now, this would be on your tools and equipment if you buy it outside of the state as well. So that's the first thing. Did you buy it outside of the state? Did it come from outside of the state? That type of thing. Now, if you have a job outside of the state, if you buy your materials in Kansas and you're going to take them to a job outside of the state, you pick them up here in the state, you're going to pay Kansas sales tax on them because you're in Kansas jurisdiction. Even if the job's outside of the state. Now, a question we get all the time is a contractor will do that, and maybe they'll be in Missouri or something. And in Missouri, they got an exempt job there. Well, Kansas doesn't recognize their project exemption certificates, their exemptions. So they buy materials here, they have to pay tax on it. So we get that quite a bit where they'll pick up their materials in Kansas and then they'll go to Missouri and they'll say, well, they charged me tax. I have a Missouri project certificate. It's like, well, Kansas doesn't honor those. That's for their jurisdiction. Now, if you purchased the materials in Kansas, but you had them delivered by, you don't deliver them yourself, but you have them delivered either by the company that sold them to you or a third party. Now you're taking delivery of them in Missouri. That's out of our jurisdiction, so there would be no Kansas sales tax. Now you'd be subject to the other states' sales tax laws. So just FYI. Just also want to show you back at that regulation, it kind of mentions that down here. It says there's no deduction, exclusion, refund, or credit for sales tax. Shall not allow when a contractor purchases materials in Kansas or when a retailer who is a contractor retailer takes inventory materials out of inventory, even though the materials may be used in a construction project outside of Kansas. So just letting you know that it's in regulation as well. So I pretty much browbeat you about the materials. Pretty much you're going to be paying tax on materials, either sales tax or use tax. Most of the time you owe tax on the materials. Very rarely do you not. So just letting you know that. Now, the labor. There should be sales tax on the labor. That's the general rule. So I'll tell you the general rule, the exceptions to the rules, and exceptions to the exceptions here. The general rule is you pay tax on materials. The general rule is you collect sales tax on the labor to install them. Okay? Well, you know that you are doing a taxable contract job when you are installing or applying tangible personal property into real property. So sometimes you might be working on real property, but you might not be installing or applying. So there are some things that are considered under the construction laws, but there's no sales tax on that particular service, particularly when they are done by themselves, as a standalone job. So mowing lawns, raking leaves, backflow testing, air duct cleaning, drain cleaning, excavation. So you see like cleaning there. First, cleaning is not taxable, but there are exceptions to that. Washing and waxing of automobile, it's enumerated in statute. Dry cleaning, laundry services are taxable, but the exception to that one is coin-operated laundry machines are not. So that was an exception to the exception. Testing is not. So if you have a job and that's all you do, well, that's not a taxable service. Doesn't matter what kind of job it is. So for example, I like to give the example that I had in Garden City. If I had an electrician in Garden City. He said he got called at around Christmas time that there was a bakery that they had a receptacle go out, an outlet go out. And he told him that it was $80 for him to show up. He called it a trip charge. And they said that they didn't care. They needed the outlet. So he shows up. He goes down in their basement, checks the breaker, he checks the wiring, and then he checks the outlet. Everything checks out. What happened was they plugged 15 things into an outlet, overloaded the circuit. It was a 20 amp circuit. They had 30 amps worth of things in there and popped the breaker. So all he ended up doing was testing it and flipping the breaker. He didn't install or apply anything. So there was no tax on that. It was just the testing. It basically just charged her $80 and there was no sales tax on that. So that's all he did was test, nothing else. Okay, so hopefully you have that one down, because now I'm going to flip you on your ear here. There's something called gross receipts, and you'll hear that a lot from someone from the Department of Revenue. In the law, it says, well, the tax base, meaning out of everything I charge my customer, what portion do I collect tax on? Well, the tax base is the gross receipts. And gross receipts is defined as the total selling price. Any consideration, anything you're charging. So the reason I tell you that is, let's say that electrician, when he went and tested that outlet, he went down, in the breaker's good, the wire's good. He tests the receptacle's bad. And that is he buys those things by the gross, so he pays $2 for them, but he probably charges, 5 or 10, who knows? But so he changes that out. Well, now that whole job becomes taxable because now he installed or applied. So gross receipt says, well, any consideration. So if it's a taxable job, if you're doing one of these non-taxable things, it just becomes part of the gross receipts, meaning it just becomes part of the thing that you sold that was taxable. It'll take on that characteristic. And so if it was a non-taxable job, it'd take on that characteristic too. But so this was a taxable job. So now before $80 just testing, not taxable. Now he had to fix the outlet, replace it. Now he has to collect tax on everything. Can't separately state the testing. Can't separately bill that one. It's part of the gross receipts and becomes taxable. So this is true for testing. This is true for cleaning. Most of these services. So this happens a lot with plumbers when they clean a drain, get a clog out. Well, if they have to remove something, install something, now the whole job could be taxable. Whereas if all they do is get a clog out and that's it, that's not a taxable service. Okay, so now what I'd like you to do for excavation, we're going to put excavation in its own category. So it's not going to be like anything else here. So imagine your brain as a file cabinet, and I want you just to have one whole file drawer just for excavation, and don't let anything else fall in there, because nothing else will be applied like this, because excavation is different than the rest of the things. So everything we just talked about, gross receipts, you cannot separately state those. They're taxable if that's all you do, but if you do something else that installs or applies, they become taxable. Excavation is different. Now, excavation is not a taxable service. You dig a hole in the ground, fill it in with dirt, not taxable. You do trenching, not taxable. You do moving, grading, not taxable. Well, you are able to separately state excavation. So let's say you get this commercial job, this existing building where they're running new wires in the ground, or conduit or something. And so they have you come and dig a trench, excavation, there's no tax on that. And so then they want you to bolster that and go get not concrete, but gravel. So you go get gravel. You're going to pay tax on the gravel. And now you're going to install it. Now you'll have to collect tax on installing the gravel. And then you cover it back up with the dirt. Well, now that's just part of the excavation. So you would collect tax on the part whether you're installing the gravel. But the excavation part, you can separately state it or separately invoice it. Actually, you have to separately state it. I'm sorry. You can't separately invoice it. So if you separately state it, then it will remain non-taxable. It will not be taxed. That's different than everything else. Now, some laws are, made by the legislature, but this law is made by a Supreme Court case in the 80s. Bernie's Excavating is the case. So that's where that one comes from. So that's why I wanted to get that one straight. The rest of them are different. So if you do excavation, that's good to know. Okay, so general rule is you pay tax on the labor. Let's go over a couple exceptions for that. So now we're still paying tax on materials, but if the labor is residential, so whatever we're working on is residential. Residential basically is defined as a place where somebody would customarily live. So people customarily live in houses. Yep. If it's residential, there's no tax on the labor. You're still paying tax on the materials, but no tax on the labor. Does not matter if it's a remodel of residential. If it's residential, that's the criteria. It could be brand new residential, could be existing residential, rebuilding residential. If it's residential, there's no sales tax on the labor. Apartment buildings are residential. The caveat to that is it's the separate living space. It's their apartments themselves. The common areas would not be considered residential. So if you're, let's say you're working on an air conditioner for one of the air units there, even if it's shared by a couple of the apartment units, that's residential. But let's say you're working on an air conditioner that is dedicated to the common areas, possibly the laundry room or something. Well, that would not be residential. If you're doing something that affects the whole complex, maybe roofing or something, then you would just come up with the percentage of residential compared to the commercial, and that's how you would apply the sales tax. That's the same way for traditional nursing homes. The only portion in nursing homes they consider residential are their private rooms. And if there's a bathroom within their private rooms, any of the common areas are not, even outside is not. So just letting you know that. Mobile homes, they're residential so long as they are permanently affixed, hardwired, hard plumb. Fifth wheels are not, like fifth wheel trailers and recreational vehicles like that. In fact, their property tax has no tangible, it is just tangible personal property. It has no real property involved. Hotels are not residential, they're transient. So if it's residential, no tax on the labor. Remember, we're still paying tax on materials, but if it's residential, there's no tax on the labor. The next exception there is if the job you're doing is going to qualify as original construction, but it's only original construction of a building or a facility. So a building, basically, it's a structure that houses people and property. So it has walls and a roof. A facility out of statute defined as a mill, plant, refinery, oil, gas, or water well, feedlots, and then distribution lines that are owned by rural electric co-ops or cities. So just their distribution lines. So they are considered a facility. So original construction, most contractors know one definition, and they're usually right on that definition, by the way. It's the first or initial construction of a building or facility. So first time it's built. So they'll call it new construction, which it is. I'm not sure if you guys downloaded the publication. We have it's called the KS 1525. So if you were to look for it on the Department of Revenue website, you would type in the search field KS and you'd put the dash 1525, and then it would pull up like a Google and typically be the top selection, and you get a PDF copy of this publication that I referred to. We are updating these, so I apologize if it's not totally up to date right now, but we're working on it. But in that book, I go over it. There's actually 5 definitions. So it starts on page 6. So the first or initial construction that a commercial building's being built. Now I'm saying commercial because if it was residential, it'd already be exempt as residential. And again, we're just talking about the labor. You're paying tax on materials for both of these. So first time it's built. Now, second definition, you can tell someone had this question, well, what if? Well, the second definition says, well, the addition of an entire room or floor to an existing commercial building or facility. So basically an expansion. The key to this one is you are adding square footage. So you're not building within the space, you are adding on. So all the time I'll have somebody ask me, so for example, in this room, if I had a contractor come in here and put a brand new wall down there, that's new construction. It's not original construction. All they did was divide the space into 2. They didn't add any square footage. Now, if I hire a contractor come in and they knock out this exterior wall and add on, well, now they're adding square footage. That's original construction. Next definition is the weirdest one because it's talking about, this is going to be considered original construction, but what we're talking about doesn't actually happen at the time of the original construction. It's been delayed and it's happening later. But there's 4 criteria for it. So, and that's listed right under there. So first criteria is the work was always called for in the original blueprints or work plans. So it's not just an afterthought. This was always meant to happen. The next one is this happens within a reasonable requisite of time, and I don't have a set number for you. It's going to be dependent on what kind of job it is, what's happening. There's so many variables that could make that difference. So reasonable, it depends on the size of the job. Again, statute of limitations 3 years, so it'd have to be a really big job or a good circumstance for that to apply. So the next definition, so that's, or criteria, I should say. So that's two criteria. The third criteria is the owner or occupant is the first or initial owner or occupant of that building or space. And the last criteria is the work would have been performed at the time of the original construction, except for circumstances beyond the owner's control. So if the owner, it's delayed because, well, right now the owner, they can't get materials. They're waiting on them to be on his control, doing all he can. So the example that we give on this one would be like a little strip mall or something. So let's say we have a brand new strip mall coming in. And maybe it's got 5 different slots or something like that. And every last one of them are leased out except for one. It's just this generic white box that's finished and waiting for somebody to move in and make it a business. And so let's say a year goes by, a year and a half, and finally we get a business to move in there. Who knows, maybe it's a shoe store or something. So we're going to hire you, and you're going to make it look like whatever the business is. So you're going to be remodeling this to make it look like a shoe store, whatever it is. Well, what you're going to want to do is go through your list and say, well, is this going to qualify as original construction? Because most contractors are going to think, well, it's a commercial job because that's a commercial building. Year and a half later, they absolutely will think that. Well, in the scenario I gave you, we'll check this out. So we'll put it through this test. The first was this always called for in the original blueprints? Yeah, it was always called for a building, for a business to move into that space. So we can check that one off. Yeah. The completion is within a reasonable requisite of time. Under the circumstances, a year and a half, he was trying to get someone to lease it. Yeah, that would be reasonable. The first or initial owner or occupant of that space, yeah, no one's ever been in there, so that will be the first business in there. And then the delay was beyond the owner's control. The owner was trying, he had no control over how long it took to get someone to lease that. So check, 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 check. So this will qualify as original construction of a building, which means, yep, I pay tax on my materials, no sales tax on my labor, which means I'm doing really good there. Now, chances are your competitor does not know this. Most contractors do not seem to know this. They'll think that's commercial. I got to collect tax. So I'm just saying you can use that to your advantage, because if you have a competitor that does exactly what you do, chances are you guys are probably in the ballpark of the same price. If they're not knowing this, they're going to be calculating and bidding this job with sales tax. Well, if you know this, now you know I have that sales tax to work with. And in fact, this is a scenario where I can charge less and make more than I normally do. So if it was an 8% sales tax, I could charge 4% less than I normally do, and I would still be making 4% more than I normally do, because I have that 8% to work with. Because remember, your competitor is going to be including that 8% as part of their bid. So it's just working smarter, not harder, but use this law to your advantage. No problem with that. That was 3 definitions. The 4th definition, it's another one that you can use to your advantage that a lot of contractors don't know about. If the work you're doing, the damage was caused by one of these things. So fire, flood, tornado, lightning, explosions, ice loading, attended winds and windstorms, terrorism, or earthquakes. So ice loading, that's an industry term for the electrical overhead wires. So it's the amount of ice that accumulates on those wires. So ice loading would not be a frozen pipe or anything like that. Flooding is natural, so torrential rains or overflowing of river, streams, or lakes, something like that. Attended winds and windstorms, that's wind speeds of 80 miles an hour or more, which I always tell everybody that's 5 miles an hour greater than a Category 1 hurricane. And that's basically, you know, Thursday in haze. It's always windy out there. So there is one thing I should tell you for residential and for original construction of a building or a facility. There's no exemption certificate for that. So that's what's kind of odd. So you still, the burden of proof that something is not taxable, the default is everything's taxable in Kansas. The burden of proof that something is not taxable is on you. So residential is easy to prove. You just need an address. That proves the location, that's residential. This, you're going to need either work plans or something like that. So let's say you have a job that it's a commercial job and they caught on fire. So Napa Auto, someone was smoking and shouldn't have been and caught something on fire, and they almost burned down, but not quite. They burned just the inside. They got it out, and they hire you to rebuild this to make it, well, damage due to fire. It's not arson. Arson doesn't qualify. Well, vandalism, that's part of vandalism. But this is not. This was an accident, a knucklehead. So since the damage is due to fire, it'll qualify as original construction. So you would pay tax on your materials, but there'd be no tax on the labor. Now, what proof can you get for that? You can't use a picture because everybody has a cell phone, but I know my nephew can make me look on fire, so they don't accept that, but they would accept if it was a picture from a newspaper article. Of course, not too many people get the physical newspaper anymore, but it could also be a insurance document, a fire report, police report. All those files get a signed affidavit from the owner of the building or manager and have it notarized that, hey, this was a fire on this date. And put that in your files. Heaven forbid you're ever audited. You're going to basically in your bookkeeping, you're going to show I either paid tax I'm supposed to or collected tax, or I have a good reason why I did not. So that document that reason in there. So just FYI. So that was 4 definitions. The last definition, I'm not sure if anyone does this kind of work, but it's bridge or highway work. So it says basically it's a place that is public vehicular travel, but it does not include any roadway or driveway on property owned by private owners or by college or universities. So if you work on public highways, it's original construction anytime they're working on that. Okay, so that's the exceptions. Pay tax on materials, no tax on the labor if it's residential. I'm going to call all 5 of those definitions now original construction. And what I mean, it's original construction of a building or facility. I should mention that building or facility is important because it's only a building or facility. It's nothing else. So for example, if we have a parking lot and we hire you you're going to repave the parking lot. First of all, a parking lot is not a building and it's not a facility. So it could be, let's say you've got a brand new parking lot going in and that's all we put in. It's still not going to be original construction because it's not a building or facility. Now, if the parking lot is in conjunction with a brand new building, if it's in conjunction with original construction of a building or facility, then it can be part of that original construction. So if we have a brand new McDonald's going in, well, and they hire you to put in the parking lot, it's going to be original construction. It'll qualify. If we have an existing McDonald's and they're putting in a new parking lot, no, that's just the parking lot. That's not original construction of a building or a facility. So that's important. But I'm going to call all 5 of those definitions original construction. And that's what I mean is all 5 of those. So when is the labor taxable? Well, the labor's taxable. All you have to do is reverse engineer residential and reverse engineer building and facility. Well, original construction, I should say. So if it's not residential and it's not original construction, then the labor's taxable. We call that commercial remodel. So commercial, again, a place where somebody does not customarily live, not residential. Remodel, not original construction of a building or facility. Doesn't qualify for original construction. So commercial remodel, I pay tax on my materials and then I will collect tax on the labor to install them. Now, all the time when I tell people they got to pay tax on the materials, they say, well, isn't that double taxation? And it's like, no, it's not really. But if you got to understand the tax base. And then they say, well, I can't afford to pay tax on that. I got to. So here's how that works. I go buy my materials. I pay tax on them. I absolutely got to get my money back for that tax I paid. I can't afford that. Well, I'm going to charge my customer more for the materials than I paid for them. That's called markup. Now, if you remember at that very first or second slide when I said if it's not the physical materials I install, it's labor. It follows the taxability of the labor. So that's what I mean. So what I'm saying is that portion, I get the question all the time, well, the markup portion, so I already paid tax on my materials, but the part I mark up to get my money back for the taxes, is that part taxable? And of course, it depends. It depends on what kind of job it is. It depends if the labor is taxable. Because what I'm saying here, if the first one is residential or original construction, the markup of materials is considered labor because it's not the physical materials we install. It's a calculation. So what I'm saying here is the markup of materials is not taxable when the labor is not taxable, because the Department of Revenue considers the markup of materials to be labor. Thus, if the labor is not taxable, the markup of materials is not taxable. And I go ahead and say the exact opposite thing when the labor is taxable. So just think of that markup as labor. So I don't know if you caught when I was telling you that your customer never owes tax on the materials. They should never see tax on materials. I never told you that they wouldn't feel it. They will absolutely feel the sales tax on the materials because it's not going to be called sales tax. They won't see it as sales tax. It's part of the labor. So that's how you do that. You have to not show the tax on materials. You get your money back by marking it up. It becomes, as far as taxability, becomes part of the labor. So now, because of that, there's a couple ways to invoice. One is what you're used to, where they itemize it. That top example, $100, $8.95 sales tax, $108 total. Okay. Well, there's a law that says, it's actually, I got it written down there, 793648. It talks about if you don't want to show the sales tax, you can do that so long as you put this language on your invoices. So the language right out of statute is all applicable sales tax included. That language means if whatever I sold you or did for you was taxable, I collected the appropriate amount. If whatever I sold for you or did for you was not taxable, I did not collect tax. That's what it means. But you don't have to show sales tax so long as you have that language. Now, if you do not have that language, you have to itemize and show the sales tax. If you do not have that language and don't show sales tax, it's going to be assumed that you did not, whether you have or not. So they will apply it as though you did not collect tax, penalty, and interest. So you definitely don't want to not show sales tax without the language. So if you don't have sales tax, you must have that language on there. If you don't have sales tax on your invoice, contractors, we recommend that they do this, that they not show the sales tax. That doesn't, now I put the most basic example. You can still itemize all your stuff. You're just not going to show the sales tax. So you just put that language on there. I understand that for contractors, not every industry does that work for, because I know a lot of the general contractors dictate what the markup is, what the amount of you can charge them for materials. So if it doesn't work for you, don't do it because you got to work. But if it will, that's what we recommend. Question we get all the time is, well, what if someone doesn't pay me sales tax? Do I owe it? Well, yeah. If it was acceptable and legal that, well, they didn't pay me sales tax, so I'm not going to pay you sales tax. No one would ever pay sales tax. So even if they don't pay you sales tax, you still owe the sales tax. So, and you would have to go after them for recovery of the sales tax that they should have paid you. Department of Revenue doesn't do that. Now, if we audit them, we will go after them, that type of thing. Now, with the materials, how you deduct those, how you, that overhead and all that, as far as the markup. When you file your sales tax return, the materials will be in that gross sales, but that's just to account for show. But you get a deduct amount. There's a part 2, and there's a line called other allowable deductions. You put the amount you paid for your sales tax that has the sales tax, or paid for your materials that have the sales tax in it. So that part gets deducted out so it doesn't get taxed again. So the materials that you already paid tax on, that amount you put in the deduction, other allowable deductions, so that it does not get taxed again. So you're showing them and then it gets deducted right back out. The other thing that happens when you're invoicing, I don't know if any of you guys have ever heard a general contractor tell you, hey, don't you tax me because I'm taxing my customer. That's double taxation. When I hear that, that tells me that the general contractor doesn't understand how the sales tax base works for contractors. Remember, sales tax base means out of everything I charge my customer, what portion do I need to collect sales tax on? So if you get that publication, I believe it's around page 18, there's a section in there that says sales tax base. And basically what it tells you is out of everything I charge my customer, so as a contractor or a subcontractor, out of everything I charge my customer, I subtract out of that amount any materials that I paid tax on, so I call those tax paid materials, or any subcontractors that I paid tax on that I hired. The amount that's left, that's the amount I apply sales tax to my customer, if it's a taxable job. So if I hire you as a subcontractor and I'm a general contractor, I get this job, so I hire you. Well, although you're called a subcontractor, you're really a contractor, and as the general, I'm really nothing more than your customer. So on a taxable job as a subcontractor, you will pay tax on your materials, and then you will collect tax on the labor. So I'm going to ask you to, as the general, to invoice me all applicable sales tax included. That way, if you did something wrong on your sales tax, I have an invoice that says I paid all applicable sales tax. So the responsibility goes back to you on your error. Otherwise, if not, the general contractor will be held for that. So that's one thing I'm going to tell you. As a general, I'm going to have you invoice me that way. And I'm going to just assume you're going to collect your tax and pay your tax appropriately. But so you did. So, okay, so now I'm selling this job to my customer. Well, all the rules still apply because I'm still considered a contractor because this is real property. But remember, out of my tax base, I get to subtract any materials that I paid tax on, tax paid materials. Well, I didn't buy any, and any tax paid subcontractors I hired. Oh, I hired you, you collected tax. So I subtract out of the amount I calculate tax, I subtract what you charge me. So whatever's left, that's the part I collect tax on. Well, I didn't install anything. Really, what I'm going to collect tax on, I'm going to mark up the whole job just a little bit so I can make money on the job. That's the portion I will need to collect sales tax on. And I'm going to invoice my customer all applicable sales tax included because I do not want them to see my markup. So that's how that works. It's not double taxation. The portion that's already had tax paid on it gets subtracted out of the calculation for sales tax. And again, it's on the sales tax return, it's going to be deducted out. So not only are your tax paid materials deducted out on other allowable deductions, so are tax paid subcontractors. So only the part that's left then has sales tax applied to it when you're calculating that. Now, can you ever get a whole job exempt or not have to pay tax on it? Yeah, there are some scenarios. Now, first of all, the very bottom one there, the public water suppliers, typically that would be like a rural water district or a city that provides drinking water, and they have paid the clean drinking water fee. They will have their own project exemption certificate. They could have a form called an ST-28EE. They are going to be exempt. Their exemption covers their materials or labor for just about anything that deals with their water production there. So I'm not sure if anyone deals with that. If you do, let me know, and we can go into more detail if you want. But I don't have a lot of people that do that portion, but the rest of them you all will come across at some point or another. So the first thing is a tax exempt entity. Now, what is a tax-exempt entity? First of all, a tax-exempt entity is a nonprofit organization. But here's the thing. Just because some organization is a nonprofit organization, that does not mean they are automatically exempt from sales tax. That is actually a federal income tax designation. So to be a tax-exempt entity, they must be a nonprofit organization. That's a criteria, but they also must be listed in the exemption statute. So statute 793606. That is the exemptions to sales tax. So they would have to either be specifically listed in that statute or qualify under one of the categories listed in that statute. Then they must apply for their tax-exempt entity status. So it's not an automatic exemption. So they have to be issued an exempt entity certificate. So if they are approved and they are a tax-exempt entity, they will have an exempt entity certificate. If you come across an organization that does not have one of these, they are not an exempt entity in Kansas. They will be taxable. There's a lot of nonprofit organizations that have to pay sales tax in Kansas. So just FYI. So, you know, the ones that you know the most would be like cities and counties and state of Kansas and federal government and universities, hospitals. So exempt entities. So they will have an exempt entity certificate. Now, if this is what they give you, first of all, their exemption will be for direct purchases only, and it'll say that on their exempt entity certificate. Okay, what does that mean? That means in order for whatever they purchase to be exempt, the money to pay for it must come directly from that entity. It cannot be a reimbursement. It says that right on the exempt entity certificate, in fact. So if this is the certificate they give you and you're a construction contractor doing work for them, so let's say it's a church and you're going to be building, I don't know, building onto their building. If this is what they give you, well, now you go buy your materials. If this is what they give you, you're going to pay tax on your materials because the money's not coming directly from them. So it's not a direct purchase. So you'll have to pay tax on the materials. Now, if you do all the work and install it, they pay you now they're paying you for the labor. So that part would be exempt, right? Now, you're going to put all applicable sales tax included. You're going to mark up to get your tax that you paid on your materials. They're not going to see it, but they're going to feel it. So the whole job could have been exempt if they had followed the rules on their exempt entity certificate. It says if you're going to do a real property project, you might hear it called real property project, real property improvement. That's construction work, working on buildings or land. They have the ability to apply for a project exemption certificate. We call them PECs. So what that means is it has to be work on real property. So this is not, they don't apply for that for anything else. So they're going to work on a building or something. That entity will apply. So most of them will apply. We got a website for them to apply. In fact, they go to the Department of Revenue website and they will apply online. And they will estimate the time. It'll have a start date and an end date. And it's only good between those dates because what happens is for this snapshot in time, they are normally exempt for direct purchases only. But for this one limited amount of time, for this one particular project, they will be exempt for indirect purchases. In other words, you getting this project exemption certificate, you are working on their behalf. It'll be as if you are them purchasing the materials. So that is only for a limited amount of time. So do not buy your materials before the start date and before and after the end date. So it has a start date and an end date. Had scenarios a lot where a contractor purchased the materials the day before they issued a project exemption certificate. Tell them, wait till you get that because they can never backdate these. Because remember, their exemption is for direct purchases only. And this is very strict as far as when this applies. And it has a start date and an end date. Now, the end date, you can see that coming. stuff can delay the project, just have that entity. You can't do it, but have the entity either call the Department of Revenue or um, send in an application again to extend that date out. So they'll give them a new project exemption certificate. That's really not too big a deal. Then they do it all the time because that's an estimate of time, you know. So how this works though is they will give you a copy of this project exemption certificate. Now, a lot of times they'll give you just one copy. Some exempt entities like to give one to you where they are making it out and where you are the vendor, you're selling this job, this work to them, and they will be, although it says contractor, subcontractor, it also says purchaser, so they would be the purchaser. They do that, and they will make a couple copies of that, keep one in their file, and give one to the contractor, the general. Not all of them do that, though, so it's not a requirement, but it's nice if they do, but they don't have to. But they must give you at least a copy that's like this, not filled out. And you're going to make copies of this because this is how you will go buy your materials without sales tax. I would also ask them for a copy of their exempt entity certificate. So I would say that you'd want one of these and then one of these and then make copies of this. Now, if you hire a subcontractor, now you will take this certificate and you are going to be the purchaser, contractor, but you'll be the purchaser. That subcontractor is going to be the vendor. They're selling to you. So you're going to give one of these made out to them like that. You're also going to give them one just like this that won't be filled out and tell them to go make copies because that's how they will buy their materials without sales tax. Oh, do we have a question?
Yes, we do.
Let's see. Is it possible to use those project exemption certificates at places like Home Depot and Lowe's to purchase miscellaneous items? You're gonna have to let me know what miscellaneous items are. Typically, no. Be whatever's incorporated into the job, materials. Most other things, no. So, you know, the lumber. So most of the things you can, but not sure. You can't buy tools with it. You can't buy gloves with it. You can't buy roping off tape or anything like that. I'm not sure if that answers your question. What kind of things are you thinking of for miscellaneous items? Nails. Oh, well, yeah, nails and lumber. That they get incorporated into the project. So yes, yeah. If you have a project exemption certificate, you'll take one of these blank ones like this, and you'll go to Home Depot or Lowe's or wherever. You go to their customer service. You won't go through the line because the person checking you out in line knows nothing about sales tax. So you'll take it to their customer service and say, I need to buy some stuff, and they'll have it on record. They'll usually give you some kind of card or something, but and then they put it on file and they will have the number to the job as well. Correct. You're correct. So you said just the stuff that does not stay with the building, is not incorporated, will not be qualified for this. One thing that's nice though with a project exemption certificate, you are able to rent or lease a piece of equipment that is required when you're doing this job. You can only use it on that job. You can only rent or lease it. You can't buy it. But if you have a project exemption certificate, you are able to rent a piece of equipment to use on that job without sales tax. So that's a nice one there. Oh, you're welcome. Let's see here. Oh, could you repeat the general contractor be on the PEC from when the contract? Yeah. So as a general contractor, I would, I think you mean when I charge the subcontractor. So I would receive a blank one. That's from if it's the church, I'd receive one from the church. So I'm going to hire a subcontractor. And as the general contractor, I'm basically buying that subcontractor's service. So I'm the purchaser. So my information would be as the purchaser. The subcontractor is the vendor. Vendor just means somebody who's selling something. So they're selling their service. So they would be the seller, vendor. And I'd fill that out, give that to them. I would also give them one of these that's not filled out and have the subcontractor make copies of it, because that's what the subcontractor will take to Home Depot or wherever to buy their materials without sales tax. Or if they hire a subcontractor, then they will do what I just did for them, and they will give them a blank one. So that's how that works for those. If I didn't answer your question, let me know, because I want to make sure that I hopefully I answered that. But if I didn't, let me know. I sure will answer it. I'm going to talk about a couple others here. So this is a project exemption certificate. You already seen that exempt entity. So if you got one of those, it would, and that's what you got. It would exempt your labor if you're the general contractor. If you're a subcontractor, so if all you got, remember this exempt entity certificate here, if you're a subcontractor, this does not exempt anything for you because none of it is a direct purchase from that exempt entity. So just FYI, you need a project exemption certificate if you're a subcontractor. There's also another kind of project exemption certificate it'll work just like this. It's a little different though. You might hear them called enterprise zone, or sometimes you might hear them called HPIP. That stands for High Performance Incentive Program. You'll know that you have one of those when the job is being done on a for-profit business. Typically that is a manufacturing plant or some kind of big plant or manufacturer like that. Their process for getting a project exemption certificate is different. Their process starts with the Department of Commerce. They have to qualify for that high performance incentive program. They're expanding, hiring a certain number of people, paying them a certain salary, and then they apply to get a project exemption certificate. But when they get one, it'll work like this. So it's just going to be, it takes longer for them to get a project exemption certificate. Let's put it that way. But everything else works the same. There's another kind that's very limited. It's an agriculture project exemption certificate. It's only been around, I think, like 4 years maybe. But it's not every single agricultural place. It's very limited. In statute, these numbers here, they're the North American Industry Classification System. You hear people call them NAICS codes all the time. That's what they mean. So in those codes, that is a description of exactly what that industry is and what it does. And so in the statute, it says that this project exemption certificate is only available for these things: cattle feedlots, dairy cattle and milk production, hog and pig farmers, poultry and egg production, sheep and goat farmers. The end. Nothing else. And that's first criteria. Then they must be, this must be for building a structure, a building. So it doesn't work for fence, for building. Then the next criteria is the job must be $50,000 or more. So we get requests all the time from some farmer that wants to put in a shed or something for his equipment, and it's not going to cost $50,000, or wants to put in fence or something like that. So it's very limited. Now, there is another kind of exempt entity certificate I want to show you. You may never run into it. It's pretty limited, but I wanted to show it to you in case you do run across it. Now, we call these by or on behalf of exempt entities. And the reason we call it that is because their exemption literally says that it's by or on behalf of them. So if you get one of these exempt entity certificates, they actually don't need a project exemption certificate. So what I highlighted there is the two spots where you can really tell. See at the top there where it says limitations, it says contractors may use this certificate in lieu of a project exemption certificate, although it is recommended an exempt entity obtain a project exemption certificate. And a lot of them still do get one, a project exemption certificate. And then down here, this is for the person you're buying for. If you notice, there's a section on these exempt entity certificates for the exempt entity. It tells all what their limitations are, but also for the person selling, it's called the retailer information. So if you were going to some place to buy materials, this is a message to them. It says materials purchased or furnished by a contractor or the materials and labor of a subcontractor on real property projects may be purchased without sales tax using this certificate. It is not necessary for this entity to obtain a project exemption certificate. So that's the message to them, letting them know that's how this one works. This is not like the other ones that require it. So again, it's pretty limited. Organizations that have that, like this one here is a domestic violence shelter. There's rural volunteer fire departments. Goodwill Industries, I believe it has one. Easter Seals, which I think is part of them. Wayside Waste, which is a humane shelter. So there's not too many that have those. That's why I'm saying you may not ever come across it. It's pretty limited. But it will exempt materials and labor. Okay. I'm not sure if anybody here does work on appliances. So that'd be like a freestanding refrigerator, a freestanding washer and dryer, like maybe a countertop microwave or something, do repairs, stuff like that. If you do, that type of stuff is not considered real property because it's not built in, it's not affixed to the real property, it plugs in maybe. Or even if it's hardwired, it's not considered real property. It's considered tangible personal property. So the reason I tell you that, it doesn't fall under the laws for construction jobs. It falls under the laws for regular retail sales. Remember, I told you a retailer, they buy their stuff without sales tax and then they collect sales tax on the final cost. So they would buy their parts. If they were working on a refrigerator, they'd buy whatever part it needs without tax, and they would collect tax on me for the final job. There is no designation for residential or original construction on those. So this is another area we recommend that the person use the invoice all applicable sales tax included, because the customer might say, hey, this is residential. Why did you charge me tax? Well, they have to because it's not really real property that you're working on. So just FYI, if somebody does this, we get questions a lot for auto mechanics. And I think it's because they break their bills a lot of times from parts and labor. But a car, an automobile, that's tangible personal property. It's not real property. So the tax on that is on the final cost to the customer, both the labor and the parts. So just FYI. Now, yeah, I've already told you about the renting a piece of equipment if you have a project exemption certificate. But in general, so not a project exemption certificate, but in general, a contractor is the end user, final consumer of their tools and equipment when they purchase it. And in general, if you rent a piece of equipment to do a job, you're the end user. You have to pay sales tax on that. A question I get a lot is, well, if I rent a piece of equipment to do this job, it's a taxable job, do I apply tax on that? Because I'm going to put a line item to my customer and charge him for it. Yeah, you do. They didn't rent the equipment. They rented your service. You rented the piece of equipment in order to do your service. It's just like buying a tool. You're the end user of that tool. Even though you used it on that and you're going to charge them, it's just another form of labor. So yeah, if the job's taxable, it's taxable. It's no different than you buying your equipment. I mean, if you could put a line item on your bill if you wanted, usage of my equipment, it'd follow the taxability of labor, that portion. But that's part of the tax base. And so in that publication on page 18, I think it is, under, might be 17. It's 17, I believe. Under sales tax base, I'm not sure if you guys can see that, but right in here, it talks about what I told you what the sales tax base was, but it also talks about this. It says, like any other retail business, your profit, including markup on materials and overhead costs, are figured into the total charge to the customer and are therefore subject to sales tax. A contractor may not deduct overhead expenses when figuring the taxable amount of the labor service portion of any contract. So it gives we give a few examples here. Non-deductible overhead items include things like building permits, consumable supplies such as form lumber, sandpaper, employee labor costs, per diem, rental or lease payments for tools or equipment, office supplies, sewer hookups, utilities. Something that's not taxable for, even if you have a project exemption certificate, would be a temporary storage container or a porta potty, those portable bathrooms. Those are taxable. You're considered the end user of those. Sorry for the pun, but you would owe tax on those when you rent those. Now, if you rent a piece of equipment and it comes with an operator, don't think of it as renting a piece of equipment anymore. Basically, think of it as hiring a subcontractor. So what I'm saying is first of all, you're going to check out what's the labor, what's the taxability of labor, what kind of job is this? If we have an original construction job going on, then you won't receive any tax on the bill from them, right? Because it's original construction. They're going to pay tax on any materials, but no tax on the labor. You wouldn't see any sales tax from them if it's an original construction job or residential for that matter. But the next thing you want to do is check on, if you're hiring this company, what exactly is it they're doing? Is the service they're providing a taxable service to begin with, no matter what kind of job? So here's an example I'd like to give. Let's say I'm an HVAC company, and we're going to put, it's an existing commercial building that we're working on. We're putting a brand new condenser unit on the roof of the building. So we have to rent a crane, and what we're doing is hiring a crane company to come out and move these units to the roof. So they're taking this thing here and moving it there. So long as that's all they do, that's not a taxable service. Doesn't matter what kind of job. So there would be no sales tax when they charge you the bill. Now, if they become part of the crew that is installing or applying, whatever it is, well, now doesn't matter. Remember, gross receipts, the whole thing's taxable. Well, most crane companies, they don't typically become part of the crew that installs. They are concentrated on just moving stuff. That's all they do. Then that's not a taxable service. So just FYI, something to look for, and look at what they do. So basically, I've told you, I browbeat you guys about paying tax on materials. And I told you when the labor is taxable, that's a commercial remodel job. Remember, just reverse engineer residential and original construction. If it's not those, it's commercial remodel and it's going to be taxable. And then get a certificate if you can. Remember, residential and original construction does not have a certificate, but the rest of them there are. I'm not sure any of you guys do work on manufacturing plants or warehousing. If you do, they have their own exemption. It's not issued. It's one they fill out. A manufacturer, their exemption is for their manufacturing equipment itself. The structure, the building, no, but the manufacturing equipment. So if you were an electrician working on the panel that's on the equipment itself, that would be exempt as what we call integrated production machinery and equipment. And so they would give you an ST-201, and that's the name of the certificate, integrated production machinery and equipment. The sister certificate is an ST-203. That's for warehousing. So basically, the grain elevators get that one a lot, or distribution centers for their storage racking systems and different things like that. So if you're doing any work like that, again, it's the same with them. the building itself is not exempt. Anything affixed to real property other than the manufacturing equipment that's going to be affixed. So the very last slide I have here, well, next to last slide, it's in your book, page 16 or 15 or 16. It's we call it a decision matrix. So if you answer no to these questions, then likely you will pay tax on your materials and collect tax on the labor to install them. So the first question right off the bat is about the clean drinking water fee, because most people do not fall under that. But if you do, then you can stop there, no tax. But if you answer no to that, you go on to the next question. You want to check and see if you have a project exemption certificate, because that'll exempt your materials and labor. Or if you're a subcontractor, you want to check and see with the general, hey, do you have a project exemption certificate for this? If the answer is no, then you want to check and see, well, look at is there an exempt entity certificate? Is it a buyer on behalf of? Remember, if it's one of those, that'll exempt your materials and labor. If it's no, well, you want to look and see, do I have an exempt entity certificate at all? Because if I'm a contractor, that'll at least exempt the labor. If I say no to that, then it's like, well, is it one of those residential things? Nope. Well, is it original construction of a building or facility? Nope. Well, boiling down, the last one is, well, is it one of those manufacturing or warehousing places, an ST201 or ST203? No. Well, no, I'm going to pay tax on my materials, collect tax on my labor. So it just doesn't cover every single situation, but it's just trying to trigger your memory on a few of the common exemptions that you could have. So trying to help get that into your head. Okay, I put a lot of information in you guys' heads here in a short amount of time. What questions do you have? Well, if you don't have any questions, that's okay. The contact information for one of the tax specialists here, feel free to contact any one of us, and we'd be happy to help you. It's our email address and phone numbers, direct line, direct email, and we get you a good answer. So I do recommend that you come back probably 6 months or a year, simply because there's some law changes that could affect you in the future. So, let's see, we have a question with, what about when we bill using pay applications instead of standard invoices, do we need to also add the memo all applicable? Yeah, whatever invoice you would use to the customer, you don't have to, you can itemize and show it, but we would recommend using that all applicable sales tax included. So I'm not sure what kind of application you're using. I don't know if that's QuickBooks or something like that, but I believe it has the ability to do that, to print out. So basically you'd print out an invoice to your customer that doesn't show sales tax, but it also in the record keeping would have that for you, the sales tax. So it's able to kind of like generate a double invoice for each. So did I answer the question that you were asking? Hopefully I did. If I didn't, let me know. Let's see. Is there any more questions? Let's see. Oh, okay. A1A document G702. I'm sorry, I don't even know what that is. I apologize. A1, is that A1A or AIA document G702? Is that for payroll? Is that what you're saying? Oh, I answered it. Okay. Well, now I want to look up what that is because I don't know what that is. That's the first time I've heard of that one. I probably should know. A1A G702. I apologize for that. Let me see. It looks like I have a hand up somewhere. I'm not sure if I'm not seeing the question. Nope. Okay. All right. Could you go over receipts again? Okay, sure. Yeah, absolutely. Let's see if I go back here. So what we're saying is a receipt to your customer. You have two ways the law says you can do it. One is at like the top section. That would be like if you go to Quick Shop or a convenience store and you buy a soda pop or something, and if you actually take a receipt, they usually ask you, do you want a receipt? If you take a receipt, that's kind of what they give you. They would show you, hey, you paid this amount. This is the amount of sales tax, the total. They would show it like that. So that's one way you can do it. But the other way is I can still itemize everything out, but I'm not going to have a line item for sales tax because I'm not going to show it. I will have the price without the sales tax in it. And so long as I have the language on my receipt, my invoice to the customer that says all applicable sales tax included, I can do that. I don't have to show sales tax. The statute right here tells me I can. But if I don't have that language, I must show the sales tax. So it's one or the other. So you have two ways you can invoice. One is you show the sales tax, itemize it out. The other one is that you put the language on there and not show it. And again, we recommend that for contractors because contractors get short paid a lot. In other words, you'll have a customer that will pay you everything except the sales tax because they believe they're not taxable. Well, that doesn't help you a bit and you can't get your money back a lot of times. So sometimes this does protect you because what they don't see doesn't hurt them. And again, that language means if it was taxable, I collected the appropriate amount. If it wasn't, I didn't. If your customer says that they're not going to work for you because if you don't show the sales tax, well, then you're probably going to show the sales tax so you can work, get a job. So we don't ever say you don't have to do it that way. You can show the sales tax, but we recommend the bottom way whenever possible. Might not always work though. Did that answer your question, Taylor? I want to make sure and get your questions answered. And I believe they sent a PDF of this PowerPoint for you guys in an email. So you guys should have that. If not, you can send me an email. I'll be happy to share it with you. It's not a problem. And if you have questions, but like I was saying, if you in the future, there's some things that may affect you guys, especially if you're new to this. I always recommend coming back 6 months or a year later. First of all, someone will make you second guess yourself. And that happens because they'll say things in a way that you're not used to hearing. And that happened to me when I first started. You know, I knew what I was talking about, but then someone would ask something in a different way. I've never heard it. I knew the answer, but then I second guessed myself because I never heard it that way. You know, the longer you do it, the more you kind of have heard things. Oh, being connected to excavation. Oh, that's what you're talking about. Okay. Sorry. Well, excavation. So excavation, the service of, if I hire somebody to do excavation, that's not a taxable service. And it will not be a taxable service. And you can what I said on that one is you are able to separately state excavation on an invoice to the customer. If you do that, it will not be taxable. It will remain non-taxable. Remember, the other services, you can't do that. They're taxable if it's attached to something taxable, even if you separately state it on the invoice. So if I have this job and I do this line item that says the excavation is this amount, you know, yeah, I installed the rock, that part's taxable. The excavation will remain non-taxable so long as I separately state it on the invoice. Now, if I just charge them a lump sum and not break out that excavation, it'll be just part of whatever it is. So if it's a taxable job, it'll become taxable. So that's what I was saying about excavation on that. So yeah, I can see what invoicing there. Yeah. So that is very important actually. So if you're invoicing your customer, you want to put a line item on your receipt to your customer for that. That way you don't have to apply tax to it. And again, you still don't have to show the sales tax on the, so it could be a taxable job, but that one line item, excavation, wouldn't be taxable. And you still don't have to show tax on any of it if you have that language, all applicable sales tax included. But you wouldn't be collecting tax on the labor portion because it wouldn't be taxable. You put a line item, you'd be fine. Is that what your question was, or did I still get it? I want to make sure and get you taken care of. Oh, gross receipts. I think I seen a question for gross receipts. Let's see. Well, gross receipts in statute is defined as the total selling price. No deductions for, basically, if there's a fee, it all becomes part of it. So if it's a taxable job, the gross receipts is the selling price, the final cost to your customer. That's the gross receipts, the total selling price. Now, with that gross receipts, with the excavation, you are able to itemize that and it would not then become part of the gross receipts for taxability. Would cutting trees and stacking them be similar to a non-stack? You're exactly right. So a lot of landscaping is not taxable because all they do is mow lawns, but cutting trees, raking leaves, clearing brush. Yeah, that's not a taxable service. Now, if you, again, let's say you do that and in plant, now remember you're installing now, so you're planting, then that gross receipts comes in play. So the whole job becomes taxable. But if all you do is mow lawns or cut down trees or trim trees, that's not a taxable service, that portion. And it took, it took me 100 times to get this, guys, because this is not an easy concepts here. So don't feel bad if you have a question on it and you need to email or something. Don't feel bad about that. That's just fine. I've had people email me the same question about 3 times. Doesn't bother me because I totally understand. Like I said, it took 100 times for me to get it. So that's just, and like I said, different scenarios just sometimes make it sound different. So don't feel bad about that. And don't ever feel like you're bugging us. You're not bugging us at all if you have a question or something. Now, if we're out teaching or something, we might not be able to get back to you until next day or something, but you're not bugging us at all. Don't ever feel like that. And like I said, we don't turn people in for audits because if we did that, no one would ever come to our classes. So don't feel like I'm going to come out and take notes and stuff like that. Is there any more questions? Did I answer? I might have missed some. I did. I'm sorry. Looks like I got them all. All right. Feel free to call. That's just fine. Well, that's all I got for today. Thank you guys very much for spending some time with me, and hope to hear or see from you guys again. And good luck to you again. If you have questions, let us know. Have a great day. Let me put up that last slide again so you can see the numbers and emails. Hopefully you wrote them down right there. That's the first slide, but that's our contact information. And feel free to contact us.